An introduction to auditing. Review questions. Number 1. What is the difference between accounting and financial statement auditing? Accounting is an information system that records, classifies, and summarizes economic events to provide users with information about the firm's financial position, its results of operations, and cash flows. Financial statement auditing is the process of accumulating and evaluating evidence about financial statement information to determine and report on whether financial statements are fairly stated in accordance with GAAP and free of material misstatements that are likely to mislead users' decisions. Discuss the major factors in today's society that have increased the need for independent financial statements audits. An independent financial statement audit is meant to provide assurance to users that the financial statements are unbiased, complete, accurate, and hence reliable. The factors of a complex society which contribute to this need are: Number 1. Remoteness of information. Most financial statement users don't have access to the firm's data and hence cannot verify the validity of financial statement information. Number 2. Biases and motives of management. Management may exploit the accounting choice and flexibilities inherent in the accrual-based accounting system to overstate earnings for opportunistic objectives. Number 3. Voluminous data. The higher the volume of transactions, the greater the risk that improperly recorded information is included in the records. Number 4. Complex exchange transactions. Exchange transactions between organizations have become increasingly complex and therefore more difficult to record properly. Number 3. Distinguish among the following 3 risks: risk-free interest rate, business risk, and information risk. Which one does the auditor reduce by performing an audit? Number 1. Risk-free interest rate. The rate that the bank could earn by investing in governmental treasury bills. Number 2. Business risk. The possibility that the business will not be able to repay its loans because of economic or business conditions, such as a recession. Number 3. Information risk. The possibility that the information upon which the business risk decision was made was inaccurate. A likely cause of the information risk is the possibility of inaccurate financial statements. Auditing has no effect on either the risk-free interest rate or business risk. However, auditing can significantly reduce information risk. Number 4. To do an audit, there must be information in a verifiable form and some standards or criteria by which the auditor can evaluate the information. What are the information and established criteria for the audit of Alpha Company? Tax return by a tax authority agent. And what are they for audit of Alpha Company's financial statements? The answer: the information for Alpha Company's tax return is the tax return filed by the company. The established criteria are found in the tax law and its interpretation. For the audit of Alpha Company's financial statements, the information is the income statement, balance sheet, owner's equity statement, and cash flow statement. And the established criteria is local generally accepted accounting principles, GAAP or international financial reporting standard. Number 5. Explain the difference between financial statements audit, compliance audit, and operational audit. Number 1. Financial statements audit. Determine whether the financial statements present fairly the firm's financial position, its results of operations, and cash flows in conformity with GAAP or international financial reporting standards. Number 2. The compliance audit. Determine whether the auditee adhere to regulations set by a higher authority. Number 3. Operational audit. The operational audit evaluates the efficiency, effectiveness, and economy of the organization's procedures and activities. Number 6. What is the differences between external auditor or CPA, internal auditor, and internal revenue agent? Number 1. External auditor or CPA examines whether financial statements prepared in accordance with generally accepted accounting principles. Number 2. Internal revenue agents, IRS, conduct examinations of taxpayers' returns using Internal Revenue Code as a criteria. Number 3. Internal auditor. Internal auditor is employed by the firm to perform internal auditing activities, reporting directly to top management or board of directors. External auditor should be a competent independent person. Explain. External auditor must maintain high level of independence from the client's management to keep the confidence of users relying on their reports. Independence requires integrity and an objective approach to the audit process. The auditor must carry out his work freely and in an objective manner. The auditor must also be competent to understand the criteria used, which is GAAP or the International Financial Reporting Standards, and to know type and amount of evidence to accumulate to reach a proper conclusion. The auditor needs also to have knowledge about auditing and attestation, financial accounting and reporting, regulation, and finally business environment and concepts.